Well, Bitcoin is going bananas. This morning we watched Bitcoin move over 87,000 US dollars, popping above 88 US thousand for the first time ever, just making that move in a couple of hours. Welcome to the Daily. My name's Jessica Ramir, market strategist with Mumu. Well, Bitcoin has indeed tapped on 89,000 for the first time in history. It's now up well over 100% this year, and bets in the options market continue to increase for Bitcoin to imminently hit 100,000 US dollars. Why, you might ask, and is this euphoria about to come to an end? Well, Trump is expected to now cause a supply squeeze in Bitcoin, while he's also thinking that he could be adding Bitcoin to the key US government strategic reserves alongside gold. And this, of course, is causing concern that we might see a supply squeeze. Now, this is all yet to be confirmed. Watch our video yesterday with comments from BlackRock CEO and from VanEck as well. Both of those CEOs of BlackRock and VanEck, two very large institutional fund managers, are indeed quite bullish on Bitcoin, but of course they would be because they're selling Bitcoin ETFs. On Mumu, we've seen investors buy into Bitcoin via a range of means. They're buying into Coinbase shares, MicroStrategy and Marathon Holdings. Speaking of Marathon Holdings, their shares rose almost 30% overnight. Back to traditional markets for a minute, the S&P 500, yes, it hit a brand new record all-time high overnight. It did close towards its lows of the day, though. It did hit its 51st record all-time high. The S&P 500 is now up 28% this year. What is really interesting, though, is that banks' shares have hit brand new record all-time highs. The KBW Bank Index, which we watch closely, that rose 2.4% overnight, while Tesla was also a standout. Their shares rose 9%. Their stock is just 15% away from hitting that record all-time high that we saw in 2021. Tesla shares are moving higher in after-hours trade. They're up over 1.2%. Currently at $353.95. Of course, there's speculation that Tesla could continue to rise because hedge funds are probably going to be forced to close their short positions. Here's a couple of other considerations for you. The last time Trump was elected in 2017, US stocks and small caps rallied for 2 straight months before losing momentum. Also note the strength of the S&P 500 rally does appear to have gained only a lot of considerable pace in the last 4 sessions. So this suggests that momentum has been pretty strong, and we haven't seen momentum this strong since August. That's particularly if you look at the market's fear and greed gauge. But do remember when Warren Buffett said, be fearful when others are greedy and greedy when others are fearful. So this leads me to my point that markets could keep rallying, but we could face a haircut soon. Why would markets be upset over the next couple of 2 weeks? Well, a couple of reasons. We're waiting to see if Trump announces tariffs. Second of all, we get 2 inflation reads in the US this week, consumer inflation and producer inflation. And of course, next week, the biggest company in the world, Nvidia, reports earnings. Their earnings and outlook is expected to be a showstopper, but if they disappoint, Nvidia shares could face a haircut, and of course that would bring down the market because they are the biggest company in the world. Last time Nvidia reported earnings, Nvidia's shares fell 6.4%, but of course this time could be very different given the magnitude of Nvidia. So what should you expect when expecting? Well, markets want to see revenue from Nvidia rise to $33 billion, up from last quarter's $30 billion. Also expect a little, I guess, of a softer revenue print for their guidance. The market's only expecting revenue guidance to be $32 billion. Doesn't really make sense, right? What I'm basically saying is it's a relatively low bar. This means there is room for Nvidia to deliver a show-stopping, better than expected result. And as I always say, a better than expected result drives share price growth. Keep that on the down low. Microsoft shares, or rather Microsoft, in as well as the other big seven magnificent seven tech stocks, they all in all have been guiding for a big ramp up in AI infrastructure spending. All in all, $200 billion is expected to be spent from the Mag 7 companies on AI infrastructure this year. And all this bodes pretty well for Nvidia. So if we do see a pullback in Nvidia, the S&P 500 and the NASDAQ, you'll probably see investment managers buy the dip. Not only do we have the US central bank cutting interest rates, but we've got a lot of money coming out of the bond market that is looking for better returns than the 4.3% on offer. Last but not least, do consider this. The US dollar is continuing to rise aggressively. This is hurting the Aussie share market. Fund managers were pretty light on holding US dollar, but they're increasingly buying the US dollar. Why? Well, they think that Trump's pro-business stance means that that'll benefit the Aussie or benefit the US dollar. So a higher US dollar is impacting gold. Now, the gold trajectory has shifted very dark. US bond yields and the US dollar are continuing to push up, and this suggests the dynamic is in play for more gold weakness ahead, and that's the daily.